chips. I'm getting rich. Running up digits, counting up 6 stacks. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich. I'm rich. Look at my chips. Yeah. I'm getting rich. Running up digits, counting up 6. My money flipping, let's take a trip. Splash. Standing on business, tycoon rich.
All right. Good morning. Happy Tuesday, everybody. We're going to get right into it. So, as you all know, we start off by talking about what we're trading. Then we talk about how we trade it. And then we get into see if we can actually find some optimal positions or optimal opportunities to trade this pair. Okay. So, what we trade is the actual NASDAQ pair. And for those of you all that aren't familiar, the NASDAQ is an index that caters to investors interested in innovative, growth-oriented companies like Apple, Microsoft, Amazon, and others, offering a diverse selection of industry leaders driving economic progress and technological advancements. And so these are some of the companies that are comprised within the NASDAQ index. And some of these companies you all might be familiar with, but we have Comcast, we have Apple, as mentioned earlier, Cintas, Paychex, Ross Stores, we have Adobe, Microsoft, Monster Beverage. So these are just some of the few that's listed in NASDAQ that you all should be very familiar with from your day-to-day consumeration. So we trade the performance of NASDAQ. Okay, we trade whether it's going up or down. We try to find profitable ways to actually take some profits out of the market trading this actual index here. Okay, so now that we have a clear understanding of what we actually trade, it's important to understand how we actually trade it. Okay, and so I'm going to kind of hone in a little bit more today. We talked about directional bias and we talked a little bit about managing the trade last week, but this week I'm going to talk more so emphasizing the BPC strategy for entry. Okay, no matter what strategy you have, you should always have your key level set. Okay, always have your key level set. So let's get into the actual whiteboard here and let's go over the BPC entry. Okay, so the first thing you want to realize is that your BPC entry should be based on the 200 EMA. Okay, the 200 EMA. EMA means exponential moving average. Okay, so if we look, let's just say this blue line here is our 200 EMA. Okay, so directional bias means to look at the market and determine where is the frequency of the market. Is it going up or is it going down? Based on this 200 here, the market is clearly going up. It's clearly going up. So when you know that, you have to start looking for buys. You want to trade with the frequency of the market versus against it. Now, there are tactics where you can trade, with against the actual wave of the market, but for more high probable setups, you want to try to take advantage of what the market is already giving you. Okay, so let's just look at this. Let's say, for instance, let me see. I'm going to actually see if I can put some key levels here. Let's see if it'll allow me to do that. It's a little weird on this, so I'll just draw it. Okay, so let's just say this is a key level here. All right, let's say this is a key level here. And this is a key level. So first and foremost, it's important to understand what are key levels. What are key levels? Okay, so key levels are areas in the market where you might have seen multiple buys or multiple sells at a specific point of the market. So for example, you might see when price comes down here, right? It might form a W here, right? And then it might go up like this, right? Imagine that those are candles. Then when price comes back down to this area, right? It comes down to this area, it goes up, it comes back down, it goes back up. Okay? So when you look at this, price came down. Here's a pivot here where it pivoted to the upside. So that's one key area because it bounced up. This is called support right here. When price is supported by this key level. Okay? Price comes back down to this same area, and what does it do? It goes up, right? So this is another key point. Whenever you have more than two key points of the market where price reacts in the same way, this is a key level. So price came down and then it went up. Price came back down to this area and then it went up. Then when price came back and retested this area again, what did it do? It went up, right? So if we're looking at this structure here, this dynamic here, this is 1, 2, 3, 4 touches. Okay, 4 touches. That means the market came down here, went up. That's 1 time. Came down here, went up. That's 2 times. Came down, went up. That's 3 times. That came down and went up. It did the same thing 4 times at the same level. So that's a key level. Okay, so when we're looking at BPCs, key levels are very, 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 very significant. Okay, let me just erase this here. They're very significant. And so it's important to understand how to trade them when we get to those areas, when price gets to that area. So what you will pretty much, so first of all, let's define what BPC is, okay? So BPC, I'll do it down here, okay? The B, and I'll make this, actually, let's do it now. Let's make this larger so you guys can see it. There we go. The B stands for breakout, okay? The P stands for pullback. And then the C stands for continuation. Okay? Continuation. All right, let's make this a little bit larger here. There we go. All right, so we have breakout, pullback, continuation. Okay? The reason why a BPC is significant is because it tells you who has potential control for the next move in the market. And great morning to everybody that's showing up. Great morning. Great morning. It tells you a significant area of where price is and how it actually shows up, right? So if we look at this key level here, okay, and we look at this key level here, that means that there were significant buys and sells at this area. So if we know the 200 is moving up, we want to look for a bullish BPC, meaning we want to look for a BPC that moves to the upside. Okay, because with buys, we want price to move up, and we can already see the market is trying to move up based off the 200 EMA. Okay, so the pattern that we're looking for, okay, let's just go back to, let's go back here, and let's do a formation here. So I'm going to make this, let's make this red. Okay, so let's just say, for instance, price came here, right? Let's just say that these are my candles here. Came up here, came back down, right? So now we see this as resistance. Price came back up here, right? And then it went down. There's another form of resistance because it's resisting to go past this area. So that's 2 times that when price came to this key level here, it resisted to move up. But on that 3rd time, we get a breakout, right? So it comes back to this area, okay? It pulls back, but then it breaks through, Okay, it breaks through. And so when we see that, that's our confirmation to get into a buy, because we already know the frequency of the market is trying to move up, right? But that's our confirmation to get into a buy based on those patterns. Okay, so let's go back here and let's look at what patterns should actually like. Okay, so we already seen that once price hit this area, it rejected, right? So imagine that these are candles here, even though they'll be red and green, but just imagine the structure of it is candles, okay? And so when price reapproaches this area here, I'm looking for 3 patterns. The first thing we're looking for is the breakout, okay? We'll use the breakout as a green candle. So it breaks out. Okay, so this is my green candle here. It breaks out of this key level. Okay, it finally breaks through. Okay, so that's the breakout. The next thing we're looking for is a pullback. So the pullback, we want the pullback to come to this key level or maybe a little bit beneath, but not too far away. We don't want it to drop all the way down here. So that's our pullback. The pullback is significant because it lets us know. So, for example, let's say we get this green candle that pops out here. We don't want to get faked out thinking that price is going to continue to go up just because it broke out. We need more confirmation. So what the pullback does, if it pulls back to this area here, that's telling us that this key level is now support instead of resistance, okay? But if it pulls back all the way down here, let's say we get multiple candles that come back down, then that means the sellers are still in control, and that was a fake out, okay? Because price is still coming back down to the downside like it did in the past, okay? So the pullback lets us know if we should be looking for the next move, okay? So if it stays at the next key level or near it, then that's a valid pullback. So we have our breakout, which is here, this green candle that popped out. We have our pullback, which pulls back to this key level. Now what we're waiting for is our continuation. Our continuation is our final confirmation if we're going to enter this trade. Continuation typically looks like a strong, in regards to a bullish BPC, a strong bullish candle, okay? A strong bullish candle that breaks past our pullback area, okay? So this is our little pullback area right here, and it breaks past that, okay? Once we see this, what we call an engulfing candle, so an engulfing candle, essentially, let's just say, for instance, I had a small red candle like this, okay? And then it's followed by a large green candle, okay? This large green candle is engulfing this small red candle. And so typically what this says is there's more money. The bulls have more money in the market, right? The buyers have more money in the market than the sellers. So because they have more money in the market, that typically allows them to continue to push price up. So price typically follows behind that. Okay? So this formation here is what we're seeing for continuation. Okay? This is what we're seeing for continuation. So once we get that confirmation, we enter the trade and we take it up to the next key level. How do we know if we should continue to stay in? We look for another BPC, and if we get another one, then we take it to the next key level. Okay? So that's how we confirm when we're getting into NASDAQ. Because it's such a strong pair, we look for this confirmation. But we look for the confirmation in the direction of the 200 EMA. Okay? That's very important. In the direction of the 200 EMA. Where is the overall market trying to move? Is it trying to move up or is it trying to move down? So we have breakout, pullback, continuation. Okay? So that's a bullish BPC. Now let's see if we can look at a bearish BPC. Okay, so it's the opposite direction. So I'm going to see if I can get rid of this 200 here. And great morning to everybody that's joined. Great morning. Great morning. All right, let's see if we can get rid of this 200 here. Okay, so let's do a bearish BPC. So I'll make this one purple. And we'll make this one come to the downside. So we'll use the same key levels here. Okay, so the market is clearly moving down. Imagine that this is your 200 EMA. Okay, imagine that this is the 200 EMA. So if we're looking at it and the 200 EMA is telling us that it's going down, then we need to trade with the frequency of the market. We need to trade with the frequency of the market. So we need to move in that direction. So here we have the 200 EMA, and then we have multiple levels of key levels. So how do we know what to look for? So when we're looking at the 200 EMA and we're looking for our BPC confirmation, let's just say we have multiple movements in the market like this, right? Where price comes down here, right? Finds support. Price comes down here, finds support. Okay, so those are multiple times key level, remember, where price came down to this key level and it went up. Remember, with sales, we want the market to go down. Okay, we want the market to go down. So we're looking for a selling opportunity because the market is already telling us that it's moving down. With trading, at least futures and Forex, if you're trading in the direction of the market, you can be profitable. Okay, so the 200 EMA is telling us it's moving down. We have multiple areas here where it found support. So we can't just hop into a sell because every time it came down to this area, it bounced up, right? It moved up. So we need confirmation to say, okay, it's time to get into this trade. So let's say price reapproaches this key level here, right? We're looking for a BPC, a bearish BPC at this point now. How do we know that it's time to get into a sell? The first thing we're looking for is a breakout to the downside. Here's our breakout here. Okay, this is our breakout candle right here. It broke through this key level. It broke through this key level. Okay. Now, our pullback is using that key level now as resistance. So price comes here, but it never comes all the way back here. So it doesn't just continue to move back up because then that would be a fake out and it would do the same formation the way it did before where it came out, but it went back up just like it did in the past. Okay. So our pullback needs to be at or near the most recent key level. Okay. So we don't want it to come all the way back up. We want it to kind of stay within this area. Okay. Then we look at continuation. So we got our breakout here. We got our pullback. Now we're looking for continuation. Okay. The continuation is here to the downside. Okay. To the downside right here. All right. So that's our continuation. So we move to the downside because that tells us that possibly price can continue at least to the next key level. We get another BPC, we go to the next level. We get another BPC, we go to the next level. Okay? So in this case, for continuation, we're looking for a bearish engulfing candle. So with a bearish engulfing candle, you'll see a small bullish candle this time, followed by a large bearish candle. Okay? So when you see this formation here, typically what happens, price follows suit to whoever has the most control. Okay? This larger candle tells us that the bears, also known as the sellers, have more control of the market than the bulls, also known as the buyers. Okay? So when we see that formation here, that tells us that we could possibly have continuation to the downside. Okay? So we get our breakout, our pullback, and we get our continuation. That's our entry. But the key factor here is that we're moving in the direction of the 200 EMA. That's the key factor. Okay? So we have that. So now that we have a clear understanding of what the BPC is and how to look at it at certain key levels, let's go look at the actual market and let's see what type of opportunities we get. Okay, let's see if we have any opportunities today. So yesterday we were looking for a BPC for the upside, but we didn't get that. The market was a bit choppy yesterday. Let's go to the charts here. 1 second. Let me just navigate over so you guys can see what's happening here. And then we're going to go through a couple of signals that came through and talk about how that looks as well. Okay. So let's go to NAS first, and we're going to see what opportunities we have. All right, so you guys should be able to see the screen now. Great morning to everybody that has joined. Okay, so let's look at what we have for NAS today. So real quick, if you're able to, let's just look at the direction of the 200 EMA. Let me see if I can pull this up on my other chart here to make it a little bit more clear for you guys so you guys can see it, because I want to make sure that you all understand what we're looking at here. Okay? I really want you guys to understand what we're looking at. Yes. Okay. So yeah, this is good. So what I want you guys to focus in on is this blue line right here. Let me see if I can get my pen. This blue line right here. This blue line right here. This is our 200 EMA. This is our 200 EMA, okay? If we look at the overall direction of the 200 EMA, this is clearly moving to the upside. So when we're looking for opportunities to get into the market, we're looking for BPCs to the upside. We're looking for bullish BPCs. Okay? Bullish BPCs. That's what we're looking for. Okay? So, now that we see that, okay, let's zoom in and see where we're actually looking for these BPCs. So we have a couple of key levels here. So let's highlight these key levels and why we stated that, right? Because remember, we talked about that there were multiple buys or multiple sells at certain levels of the market. Okay? So if we look here, let me see if my pen wants to work today. If not, I'll grab my other one. 1 second. Okay, we're going to use the other one. All right, so if we look here, we can see at this level here, price went up. Price came back to this same area. And what did it do? It went up. This is a key level. Okay? That's a key level. Now, let's look at another key level. Price came up to this area. And what did it do? It went down. So it came up, then it went down. Price came to this area here. It went down. This is a key level. It also used this level as support. Price came to do, it went up. Came back down to this area here. What did it do? It went up. That's 1, 2, 4 touches at this same level. At this same level. We move to the next one. What do we see? 1, 2, 3. Three touching points here. That's a key level. Now, this next one here, we have to acknowledge, even though we don't see multiple touches here, okay? Because look, if we look to the left, there's nothing here. But we have to acknowledge it because look at how price reacted when it came here. Price shot up here, and then it came right back down. So there are significant buyers and sellers at this level. So when price reapproaches this, if price came up here, there's a chance that it could do what? The same thing. The same thing. Okay, so you always want to look left so you can see what's actually happening in the market. Okay? So let's take a look at what we have for today. Because right now we're sitting in between a couple of key levels here. Okay? We're sitting in between a couple of key levels here. So let's zoom in a bit and let's see what we have. So our first key level is at this price level of 22,724. Okay? So that means when NAS was at $22,724 for price, it made significant movements here. Okay? Now, our next key level is 22,800. Now, here's what's significant about this one right here. We've already seen when price came up here, what did it do? It went down. Price came back up to this area. What did it do? It went down. Price came back up to this same level. What did it do? It went down. So we're approaching this area here. Price has already shown us that it wants to sell off at this level. So we can't just hop into a buy aimlessly thinking that price is just going to shoot up. Okay? We cannot do that. We have to respect what the market is already showing. Okay? We have to respect that. So now that we know that, we can pretty much wait for our formation. We're waiting for what? Our bullish BPC. Okay? The reason why we're looking for a bullish BPC is because the 200 has clearly shown us it wants to move up. The 200 has clearly shown us it wants to move up. Okay? So, when price gets to this area, I want to see that formation. So let's go back a little bit here. And let's see if we can let me see if I can draw. Yeah, I can put a couple of squares on here so you guys can see. Okay, so I'm looking for my breakout, and I'm going to make this one green instead of red. Okay, just follow that, right? And then I'm looking for, let me make a copy of this one because we're going to need 2 of these. All right, so let's clone that and move this over. Next thing I'm looking for, a pullback. Okay, I'm looking for a pullback. So my pullback, remember, we want the pullback to stay at or beneath our key level. Our next key level, we wanted to stay at or beneath our next key level. So we're going here. We're going to click red here. So that's our pullback. So price breaks out with a bullish candle. It pulls back with a bearish candle. Or sometimes it's not always bearish. Sometimes it'll be the formation of it. Like as long as price pulls back to this key level, that's valid enough. Okay. And then we have our continuation. So that's our engulfing bullish candle, our bullish engulfing candle. Okay. So price is above, it closes above this area. We enter here and we try to take price up to the upside. So I'm going to leave this here because I want you, because if this plays out the way that it could, then this will be a good visual for you all. Okay. But that's what we're looking at for today. We're looking for a buy entry and we're waiting for our BPC at this 22,800 level. We have to see full confirmation because we've already seen that price wants to sell off at this level. So we have to wait for all three of our confirmations before we enter the trade. Before we enter the trade, we have to wait. Happy New Day, Mary. Happy New Day. I'm sorry I'm a little late, but Happy New Day. Okay? So, to move forward. So, that's our entry for what happened yesterday with NAS. So, we were looking for a buy, and I believe it was at the same area. Yeah, it was at the same level. So, we were looking for a buy here, but what happened? Price came up to this area and we never got our BPC. We never got our BPC. Price came up here and it instantly rejected. I did not take the sell because our 200 has told us that we're looking for buys, not sells, right? So price, the market opened probably like around here, this candle right here. And you can see that there was some choppiness going on here, a lot of volatile candles. Price eventually came down to the downside, but it struggled. It didn't drop until, let's see, almost 1 o'clock yesterday. And I'm definitely out of the market by then. I'm not in the market that long. Okay. So I stayed out of the market. Now, if I get what I want to see today, then I'm going to hop in. But if I don't, then that's fine as well. Okay. So now that we have a clear understanding with NAS, let's go take a look at some of the signals that came out between this morning and last night. So we, in the Blue Chips Academy, we have a channel called the Gold Mine, where we get signals based on the 20 and the 200 EMA. Okay. So the most recent one is gold. So with gold, let's see if we can get gold up here. Okay. So with gold, it told us to sell. All right. So how do we know that this is a valid sell? So one thing, and this applies to all pairs, we want to look at the overall direction of the market, right? So right now, gold, if we look at it from here, gold is kind of moving sideways, right? So what was gold doing before it was moving sideways? Gold was coming down. Look at this down slope here for gold. It was coming down. Okay, it's moving sideways here, but what was the direction before it was moving sideways? It was coming down. So when I'm looking for, so if I know that, then I know that a sell could be a high probable setup. Okay, could be a high probable setup, and I'm actually in this trade right now. So the reason why we want to see if the market is moving sideways, and we want to, and we can't really determine direction. We have to zoom out to see what it was doing. We have to zoom out to see what it was doing before it started to move sideways. So here's a pattern that happens in the market. And great morning to everybody that's joined. Great morning. Okay, so let's see here. Let me get my pen again. And this is what typically happens. You'll see a trend, right? And then you'll see price move sideways. Then you'll see a trend, and then you'll see price move sideways. Okay, so you'll see that formation often. Okay, or you'll see a trend, price move sideways, and then it'll reverse to the upside. Okay, so in those cases, that's just the likelihood of you getting getting into the trade, right? But you want to go with the frequency of the market. So I entered this sell because we have our 20 crossover our 200. We already know that's what we look for. Okay, here's our 20. This white line here, let me take my Keltner off for now. Okay, let's remove that. This white line right here is our 20 EMA. This red blue line right here is our 200 EMA. So when we're looking at this, we can see the powerful moves came from sales, right? Came from sales. So here we had a crossover from a sell, nice drop to the downside. Nice drop to the downside. Another strong candle that dropped to the downside. Okay? And that's because that's the frequency of the market. So that's why I decided to enter this sale. Now, the next signal we had was GBP USD for a sale. So let's go look at GBP USD. All right, beautiful sale here. Okay, so let's look at it. The overall direction of the 200 is what? Coming down. It's coming down. The overall direction of the 200 is coming down. Okay, so when we look at this, we can see here's our crossover. Look at that drop. Look at the drop. Okay, another crossover here. Nice drop here. We get another crossover in GBP USD dropped again. Okay, so by waiting, so I'm like, oh, the first thing you want to look for, okay, what's the direction of the 200? It's going down. Let me only wait for sales when GBP USD comes into play. I'm only going to wait for the sales. Okay, those are your entries. All right. Then we had a GBP USD buy, which was like right here, but it just looking at the frequency of the market, you would have, because market is coming down. All right. Then we had an AUD USD buy. Let's go take a look at that. I didn't actually look at that one, so we're looking at this for the first time together. The AUD USD had a buy. Now, AUD USD, I believe, is kind of moving side. Hold on, let's see. Oh, actually, we're moving to the upside here. Okay, so price is going up for AUD USD. So a buy for AUD USD wouldn't have been that bad. Now you might be in a little bit of drawdown here, but the goal is that it moves eventually to the upside. Okay, so that's what the AUD USD looks like. All right. So now that we have a clear understanding of how those signals work and how to look for those signals, you don't have to take every signal. You take the signal that's moving in the direction of the 200 EMA. Okay, you take the signal that's in the direction of the 200 EMA. Sylvester said, "Let's do the doggone thing, Coach." Coach Blue, that's right, Sylvester. Great morning, glad to have you. Always great to have you. Always, always. Okay, so we have a couple of minutes, guys, until the market opens. I always tell people to check the news. You have to check the news before you start to trade. I cannot emphasize this enough. You have to check the news before you trade. All right. What we use for the news is a couple of resources. We use forexfactory.com. Forexfactory.com. Okay. We use that to actually put ourselves in position for our trades. Okay. So if we're looking at today, we don't have any red folders. That's a great thing. But tomorrow, we have a red folder for FOMC at 2 o'clock. FOMC is typically a very volatile point for news because that really shifts the economy based on the information that's provided. Okay, so I typically do not like to trade news because it's unpredictable. We do not know or understand. Well, I won't say understand, but we do not know how people are going to respond to the news that's given. So I typically say, stay out of the market. Okay. If you decide to get in, you wait 10 minutes, 5 to 10 minutes, depending on your strategy, after the news happens to look for a possible entry. Okay. To look for a possible entry. So always, always, always check the news. And then we have a red folder Thursday and nothing on Friday. Okay. So let's see if we catch some volume today, considering that we don't have any red folders today, which is pretty good. Okay. And we can pretty much, determine what our factors are from there. All right. But for right now, we are, we're okay. But let's look at what could possibly happen for tomorrow. We go to Yahoo Finance to see what's happening in our economy. And we can see that China warns Trump on payback. So there's a warning of higher tariffs in August from China. So this is and with the tariffs, that's kind of like a trading war, to be honest with you, because there's a lot of inconsistencies. There's a lot of back and forth that's happening. So patterns that you normally would recognize or use as confluence when you're in the market, you don't necessarily see that with tariffs because there are multiple aspects that affect how the market moves. Okay, so just kind of keep an eye out on that type of information. It also says the U.S. stock futures stall as Trump lays out tariff threats. So when it says it's stalling, that tells me that we could pop consolidation, meaning people aren't putting money into the market or they're indecisive because they don't know which way the market is truly going to move. Okay, so yesterday was choppy. So just knowing that this news came out about an hour ago, there's a chance that it could be choppy again today. So we have to be cognitive of what's going on, okay? Because all of this stuff affects our economy. All right? So now that we have a clear understanding of news, let's get back to our chart and let's see what if NAS moved in any way before the market opened. Okay, so we're going to shift our focus back to the chart. Okay, so looking at the candles right now, what are we looking at? Consolidation. And for those of you all that aren't familiar with consolidation, basically means it's a choppy market where price just kind of comes up, comes down, comes up, comes down. There's no clear direction of where price wants to move. What do we see here? Up, down, up, down, up, down. That's what we see right here. Okay? So knowing that, we have to be very careful, okay, when entering the market. We need to see some fluid movement before we make a decision. And we're not going to force it, okay? Because at the end of the day, if it's there, it's there. And if it's not, then that's fine as well. But we're not going to force a situation. And that's exactly why I did not get in yesterday, because it just was not, I didn't like the way the candles were forming. A lot of wicks, a lot of volatility that just wasn't moving too much in any direction. Okay. So we have 50 seconds, guys, until market opens. And let's see what we get for today. Of course, my directional bias is a buy. But we'll see how this plays out. Now, if we do entertain a sell, I need price to cross over the 200 first and foremost, and I needed to break past the 200. Okay, I needed to break past the 200. So we'll see. And if it is, it's going to be a very, very short and small sell if I do decide to get into one. I just have to see how the candles are looking. Okay. But we have 10 seconds until market opens. We'll be on here till about 10 o'clock, guys, to see if we can find some opportunities here. And we'll go from there. All right. Market is open. Let's see what we get. Let's see what we get here. It looks like price might be trying to find support here, but it's still a lot of time. We're just opening up, so we can't make any assumptions. We gotta let this thing do what it wants to do here, and then we make our assessment based on that. You never want to assume that you know what's going to happen in the market, because you don't know. You're literally trading against millions of traders, banks, institutions, and to believe that your analysis is going to change the market is just not realistic. Okay? So let's just see what the patterns are showing us, and then make an assessment and make a hopefully a trade based on what the market is presenting to us. Okay? So we're waiting, and we're going to see what happens. We're going to see today, a buy or a sell. What you guys think? What do you guys think we're going to get into today? A buy or a sell while we're waiting? Let me know. If you're able to, you can put it in the comment section. Let me know what you guys think we're going to get into today. A buy or a sell? What's your assessment? A lot of times we be having people on the fence. Some people say buy, some people say sell. It's always interesting to see people's perspective on that. But let's see if we're in a buy or a sell. What are we doing here? What are we doing here? Looks like price is just kind of teetering between this candle right here. Okay, we're getting a little breakout right here. Let's see if it closes like that. You don't want any false breakouts. We don't want any false breakouts. So we're going to wait, or we're going to be patient. We're going to wait and be patient and see what we get. What are we going to get for today? Let's see. Let's see what we... It's fine. Let's see. Let's see here. Let's go take a look at the 1 minute and see what's happening. Now we're sitting at this 200 right here. So this 200 can serve as support, or price can break through. And I do see a possible double top here. So an M formation, right? Where price comes up, down, up, and then we come to the downside and it forms the M. But we have to see what happens. Let's go to the 1 minute and see what's going on. Okay. All right. Looks like price might be trying to bounce up to the upside. We'll see how this candle closes here. But we definitely got a breakout here. But again, I want price to close clearly beneath the 200 before I even try to entertain any type of sale. Okay? That's what I need to see. Because NAS has a tendency to do a lot of fake outs if you're not clear on what's happening. If you're not clear on what's happening. But based on the patterns of these candles, it looks like it's trying to move to the downside, but we'll see. We'll see. Still a lot of time here. And if we go back to the 15 minute, we can see, let's see. Price is trying to break this 200 EMA here. Okay, it's trying to break it. Now, if it breaks the 200 EMA and it gets to this key level here, we will look for a BPC, a bearish BPC to the downside here. Okay, that's what we would look for. A bearish BPC to the downside here. But it has to be a clean break. So we still have some time and to see what's going on with this. Okay. When I see wicks like that tells me that buyers are coming in. I don't even have to go to the 1 minute, but I'll show you guys anyway that there's some green candles that's coming in here, right? So if we go to the 1 minute here, we can see that, yep, there's our green candle that came in. That's that wick on the 15 minute. Okay, so that's why you got to be careful not to just hop in on those big candles like that. You can't be impulsive. You cannot be impulsive. All right. So let's go back to the 15 minute and let's see how this thing closes for us. Still have a lot of time left before making a decision here. Still have a lot of time left. And if you have questions, please feel free to ask. That's how we learn. Ask your questions. That's how we learn. Okay? That's how we learn. Right now, we're just kind of waiting here. Let's see what's going on the 5 minute. Okay, 5 minute trying to find a little bit of support. But the 5 minute clearly broke through. Let's see if we can get some continuation. Right, because here's our breakout here. This candle broke through this level, this key level. Here's our pullback. As long as the pullback stays under this candle here, it's a valid, under this key level or at this key level, it's a valid pullback. Then we wait for a continuation where price breaks through. If we get that continuation candle, we can go ahead and enter. We can enter. Okay. But we still have some time to wait. This candle has about 2 minutes and 10 seconds left on it. And let's see if we can catch an entry before about 10 o'clock. See if we can get in. Let's see if we can get in. Here we go. Here we go. Okay, not bad. Not bad. We have a minute and 20, guys. Minute and 20 left on this candle. Let's see if it stays solid. Stays under our key level right here. We want this candle right here to close beneath this key level. That's what we want for potential BPC, guys. So we got our breakout. Here's our pullback. Now let's see if we can get our continuation. So the pattern looks more like this, but the opposite. So you have a red candle down here, green, and then it's red. But that's definitely our pullback for sure. Now, as we get closer to this one here, I'm going to take a look at the 1 minute to see if we can get a good entry here. See if we can get a good entry here. Now, I'm not going to put 2 positions in on this one. I'm just going to put 1 position because that's not the frequency of the market. The market is trying to move up. So this could be a retracement on a higher time frame. So I'm not going to put in 2 positions. I'm just going to put in 1. Okay. Great morning to everybody that's joined. Okay, Mary says she thinks it's going to be a sell. Yeah, the way it's looking, Mary, I think you might be right. I think you might be right, Mary. Let's go to our 1 minute. We're getting close to the key level now. Let's see if we can get our BPC here. Let's see what we're working with. Are we going to find support here, or are we going to get some continuation? What are we going to get here? We need a BPT past this 22,690 level, guys. 22,690 level, we need a BPC. Okay? That's what we need. That's what we need. Oh no, we might be making a reversal here. Very interesting. And this is the part where I was saying price might be indecisive, going back and forth. Price could be indecisive, going back and forth. So I'm navigating to the 5 minute here to see what's happening. Now, this is why key levels are so important. Okay? Price has already shown us in the past that it wants to possibly buy at this level. Okay? We see that here. Price came down, and then what did it do? It went up. Price came down here at this same key level. What did it do? It went up. So we're reapproaching this same area right here. And what's happening? Price is moving up. How far will it go up? We don't know. But it's moving up. So we have to respect that. That's why key levels are so important. You have to respect key levels because it literally tells you what could potentially happen based on where you are in the market. Based on where you are in the market, it could tell you what could potentially happen. And now it looks like we're trying to reverse now. So if we go to the 15 minute, this is probably a wick. Yep, that's a wick. That's a wick on the 15 minute. This skinny line right here, that's called a wick. Okay. The box part of the candle, that's the body of the candle. The skinny part is called the wick. All right. So let's see. Let's see what we get. We got about 15 more minutes to see if we can find an opportunity to get into the trade. Let's see if we can find an opportunity to get into the trade. Minute and 17. Naz is having a hard time right now figuring out what it wants to do. Having a hard time. And again, we're not going to force anything. Anything. Sometimes price might not be ready to move right when the market opens. We just already saw that based on our news. Wall Street is stalling because of the tariffs. So we don't see too much movement right now. People don't know which way they want to move the market. This stuff plays a major role on what's going on. All right, so let's see what happens. Get this thing about 10 more minutes, and we're going to wrap it up. Let's see if we can get into something before then. If not, I'll show you guys where I'm setting my alerts for possible entries, and then we'll go from there. And for everybody that's in the academy, I'll post a trade in the chat if I find something to hop into. But we are not going to force what's not there. Do not force what's not there. All the way at the top, that's where we're looking for a buy entry. Anything before that is a risky trade. Because we've seen multiple times at that area where it rejected 2, 3, 4, 5 different times. So to hop into a buy knowing that sellers are sitting here would not be a smart decision. Okay? Would not be a smart decision. All right, so here we go. Here we go. Not too much movement right now. I'm not liking the way I'm not liking what I'm seeing right now. I'm going to be real with y'all. Excuse me. When Nas start moving like this, I try to stay away. But we'll see. We'll see if it starts to pick up some volume. We'll see. Right now, we're just kind of waiting for our opportunity. And that's another thing about trading, guys, is that you have to be patient and not anxious. You have to be patient and not anxious. Okay? That's very important. Very important. Right now, we just experiencing consolidation on a lower time frame. Barely any money in the market right now. People are apprehensive. People are very apprehensive right now. I'm going to give it a couple of more minutes, guys, and then we're going to wrap it up, and I'm going to show where I'm setting my alerts, okay, for possible entry. Also, for all of the students that are funded, while I have you guys live, something also to be excited about is that they increased the source that we're using. They increased the instant funding to $200,000. So you make 10 to 15% in a month. You're bringing in $20,000 to $30,000 a month, trading exactly what we're doing now with that funded account. Okay, we're going to talk about this more when we're live tomorrow in our private session. But just to kind of give you all a heads up of what we're looking at. Let's go take a look at gold. Gold looks like it's moving a little bit while we're waiting on Nas. Let's see here. Oh, yeah, it took a nice little dip here. Did it hit my TP? Oh, this is the 1 minute. Let me go to the 15 minute. Nice little drop here for gold. Yeah, nice drop. So we'll see if it can hit my TP, which is here. Really, my TP should be right here. Yeah, so I'm going to close one of my positions here. And I'm going to let the other one do what it do. I'm going to bring the other one to break even and see how far it wants to move. So TP one hit for gold, guys. TP one hit for gold. That's where it is. So now I'm at break even, and it is what it is from this point. All right. No risk trade. We like those. Okay, so let's go back to NAS and see if we got anything here. And if not, that's okay. We're going to call it a day. Yeah. Look at this consolidation right here. Chop all across. Okay? So we're going to let things do what it needs to do. And hold on, we coming back down now. Hold on. We might get it. We might get an opportunity. Let's see. See if we got some movement here. Looks like it's finding support again. Yep. Okay, so for NAS, guys, I'm going to set my alert at 22,684 for sale. I'm going to set my alert for 22,806 805 for a buy. Okay, so what that's going to do is if price crosses through, that's telling me to look for a sale. And if price crosses above at the top side, that tells me to look for a buy. And if I get into the trade, I'm going to let you all know if I'm able to in the chat. I'm going to let you all know if I'm in that trade or not. Okay? But right now, we're not seeing anything for NAS. It's just kind of trying to figure out what it wants to do. And that's okay. We'll be patient. If it does decide to move a little bit later on in the day, we're going to go from there. Stop loss on gold was too low. Oh, yes. So, Mike, for gold, you want to make sure that, especially for gold and NAS, you want to make sure that you give those stop losses enough space because those are volatile pairs. So let me just go to gold real quick so you can where I had my stop loss. So I'm on the 15. Let me go to the 15 minute. Okay. So on the 15 minute here, this is my entry. This was my entry line right here, right? So I'm looking at the previous pivot. The previous pivot is here. Okay. So I'm going to go right above this area here, this little swing right here, and place my stop loss right there. That's where I place my stop loss. Okay. So once you do that, then you're in position to close out the trade. But yes, with gold, you have to give it a little bit. So let's say that this is the previous pivot here, give it a little bit more space above that, just so that it can breathe and move to the downside, because it's definitely moving now, right? And if you want to re-enter, because it's at a key level right here, go to your 1 minute, and you can still look at a BPC. Right? So if you get a BPC here, right, take it to the next key level. So if you want to re-enter that, okay? All right, guys. We are going to wrap it up for today. Thank you guys for joining. Make sure you like, subscribe, hit the bell notification so you can know when we're live. And I will catch you guys on the next one, next Tuesday at 8:45 a.m. Everybody that's in the academy, I'll tap in with you guys tomorrow. We're going to talk about not only execution of the trades, but we're also going to tailing and going to a higher amount. Okay, very soon, so we can start pulling from the instant funded account. Okay, so enjoy your Tuesday. I'll talk to you guys soon. All right, peace.